Shares of Nvidia soaring this week after its already 240% gain last year. Is that a sign the stock could see another banner year? Our Deirdre Bosa tackling that today in Tech Check. Morning, Dee.
Hey, good morning, Carl. Well, tech as a whole, it feels like it's back after that very poor start to the year. Nvidia leading the way, quietly up some 12% this week alone. And that is quite a change in tone from the first week of the year when the Dow, remember, it hit a fresh all-time high, but the tech-heavy NASDAQ, that lagged. Part of that was the air coming out of the Nvidia story after a banner last year. Export controls restricting China sales and reports that Chinese customers didn't want that downgraded silicon. That is still in the backdrop. But as B of A put it this morning, Nvidia is just Nvidia. Huawei nor any other Chinese chip maker is going to replace it anytime soon. And there's even reports that Chinese companies are resorting to repurposing Nvidia gaming chips for AI. On a price to earnings basis, let's look at that. It is not hard to find arguments that Nvidia is still cheap. Consider Nvidia versus Amazon. Amazon trades at around 41 times its projected 12-month earnings, while Nvidia trades at just around 26 times. They are both AI beneficiaries, but one indisputably dominates its market while the other is still making that case to investors. Let's put it another way. Nvidia shares, they more than tripled last year, yes, but that actually lagged the fundamental growth of the business. Earnings nearly quadrupled. Now, other chip names, Marvell and Broadcom, also getting some buzz out of CES this week and helping to push up the semi space as a whole. We talked about software earlier this week as well. A new normal where valuations settle at perhaps more mundane levels, but leading to fresh opportunities. The IGV software ETF up nearly 6% since Monday. The deal chatter continues to roll in the space. You've got HPE and Juniper. That was an unexpected one. And then you've also got recent reports of private equity looking at PagerDuty and DocuSign. This week's action in mega caps and a layer down, maybe suggesting that tech and AI could continue to drive leadership this year. But what could spoil the optimism? That's upcoming earnings. Yes, we're already there. 2024 guidance, that will be key. And that is where worries could come into play and investors could start to take a hard look at these early gains. One name that I'll end on, guys, is Apple. After also a rough start to the year, it got some buzz this week. And Goldman actually naming it a top pick going into earnings. We broke down its AI proposition in our weekly deep dive. It's about 10 minutes long. Be sure to catch that at cnbc.com/TC Weekly. Guys, I heard your conversation at the start of the show with the RBC strategist, and sort of the bear case here is that what else is there to buy, right? There could be opportunity elsewhere, and you got to take a hard look at those valuations.
Yeah, it was sort of like peak optimism she was talking about from her tech analyst. Thank you, Deirdre.